This morning I've noticed USD CAD, AUD USD and also Euro USD have came through with the setups I've been waiting for nearly a week now. All of these setups are described in further detail in our members zone, and also I did a little minute Instagram clip playing around with some video software at the moment. It's become more of a little hobby of mine, but I did post that on Instagram as well. But I've noticed these have came through now. I'm actually in one of the trades. I've been in one of the trades for 2 weeks. It's been floating up, down, up, down. I'm just waiting for USD CAD to break 1.3 at the moment. So I thought, you know what, something different. I haven't done any technicals in a while. I just want to jump on to the chart shortly and just go over the setups, give you guys a little bit of a breakdown on some of the fundamentals, some of the medium-term targets, and some of the risk-reward setups that I'm expecting to play out on these pairs. So what's been going on recently? More or less just trading every day from home. Well, when I say every day, looking for setups every day and so on. As I say, USD CAD have been in that trade for around a week. And the others, the Euro USD and the Aussie, I've been stalking that for nearly 2 weeks now. It's come through today. So the time frames I'm more or less studying on 4 hour, 8 hour and a daily at the moment, because I'm just trying to fit in trading with my actual daily routines and so on. So yeah, go into that shortly. Now, the other day, Nat posted a video on our YouTube channel titled "How Much Can I Make Trading Forex?" And that video sparked a lot of controversy, some good, some bad, you know, and we had a lot of comments, a lot of activity on that video. So firstly, I wasn't present in that video myself. However, Nat went through some of the concepts of, well, firstly, let me put it like this. In this market and in any other field of work, everybody's entitled to their own way of doing things, their own way of mind, etc. And you know, you just have to respect that. It's not saying, okay, this is how it has to be done, you have to do it like this. No, no, no. So what the video was about, if you guys haven't watched it as of yet, was about withdrawing money from your trading accounts, you know, rather than compounding. Now, just throwing my 2 cents out there, I believe Nat didn't really go into the psychological aspects of why the video was created, which I'll go into in a moment. But compounding or withdrawing money is completely up to you as a person. It's just giving people another flip side to actually taking money out of the market, okay? Because you know, I log on my Facebook especially, and there's so many people getting actively involved in the market now that people are posting things like, I'm starting with $50, $100, goal, hashtag 10k or whatnot. And to be honest, there's nothing wrong with that. However, it can be a little misleading to those generally, you know, getting into the market thinking FX is more or less a quick fix, because it isn't a quick fix. What Nat was trying to explain is, if you want to get to a decent level where you can trust yourself with a larger amount of capital, and investors will always come. You know, all you have to do is, that's why we provide people with a journal, a spreadsheet, the before and afters, etc. Because journaling your work and looking back at it is going to give you guys the confidence to actually move forward and handle more money. So, firstly, you have the withdrawing aspect of, okay, let me make some, take it out. It doesn't have to be all of the money that you've made. It doesn't have to be every trade you make. It could be, okay, I've had a great week, great month, great few weeks. Let me take 50% of that profit out. Why? Because this general psyche of people these days is not too strong, especially when it comes down to trading. Everyone wants to be involved, everyone wants to get into a trade, everyone wants to always be in a trade, which is nothing wrong with that, because the FX market is fast paced, it's exciting. However, what we have observed through working with many people is that, you know, some people have an amount of money, they might double it, triple it, have a great trading streak, and sometimes a streak of wins is often harder to manage than a streak of losses internally. Why? Because you get ahead of yourself, you get, you know, too big for your boots, overconfident. So you've had a big win, okay, let me, boom, put up the lot sizes, etc. Now that is down to risk management as well. There's nothing wrong with compounding the account as long as you manage the risk, simple as. So what we're trying to get across is, going into the market, it's not a quick fix. You know, slow and steady. And when you go in slow and steady, sometimes when you focus on the pips and the percentages rather than the money, because the money aspect comes naturally, it's always just great to maybe take some money out of your account. Why? To reward yourself for the hard work, because it is hard work, mentally challenging. So it's great to Do your journal, do your pips, even if you're not making a lot, even if it's £20–30 on a small account you're practicing on. Okay, great, I've had my first withdrawal, this is working for me, get the ball rolling, put the energy out there, the energy's coming back to yourself. So it's not a solid set in stone way of thinking, okay, you have to do this. It's the problem with people these days, they'll jump to it, they'll feel offended by it, like the information out here in the world, if everyone got offended by everything, well, a lot of people do, the world would be chaos. So all I'm saying is take all the information as neutral, take what you need from it, discard the rest. We don't have to get into a big ordeal because it's different for everybody. Some person could come fresh to the market with 200k, has a lot of money and wants to compound that. Some people may come to the market fresh with only a couple thousand, if not less. But all we're going off is experience, what we've observed from many people, okay, who have maybe had experience when they flip their account many times, haven't really taken anything out of their account, got way too ahead of themselves, blew it, and then wishing, you're always thinking to yourself, oh, what I could have done with that money, I wish I withdrew that and so on, because we're just going to give different alternative advice. It's always great to give alternative advice because at the end of the day, if no one did, everything's going to be the same, and the mold isn't ever going to get broken. So we apologise if it offended anybody. You don't really need to get into your feelings too much. It's not aimed at anybody. It's just an alternative way of thinking, and again, it comes down to the trader. It comes down to the monetary wealth of the trader as well, the risk profile of the trader. Are you more risky, are you more conservative, and so on. So if the glove fits, if it resonates with you and your heart, then that's great. If it doesn't, move on, carry on with your day, etc. So that's that. I just like to throw my 2 cents over there. Now, excuse the mess on this desk right here, but I've got some book recommendations for everybody as well. I've always got my head in books. Big one, Third Circle Theory. This, I bought this package off thesecretentourage.co.uk or .com. By the way, I don't make any money from recommending these books for you guys. I'm always putting these on my Instagram and Snapchat. But this book, it's on fire. So check that one out. I got Money Koshpin's book as well. A lot of you guys are familiar with this guy, Money Koshpin on Instagram. 0 to 100. This guy's gone. I think it took him around 20 years. I haven't actually started this book yet, but it's all based on real estate and property for anybody who's in that field. Now, this book, brilliant. Bitcoin, the future of money. I am more or less just past halfway in this book. I've studied cryptocurrencies for quite a while, but yeah, this will give you a breakdown and a foundation to work from if you are going to study cryptocurrencies, blockchain, etc., and how it all works. And also the Euro USD. Firstly, mentioned this last time, a good few weeks ago on our last Technical Tuesday video, but this has been quite difficult to trade, to analyze because of its crazy movements. However, I'm going to break this down into a simple format for everybody to understand. So first and foremost, I'm on the weekly time frame here. Now, not last week but the week before, we seen a breach, and we did actually bypass 1.1450 and 1.5. With that being said, we came all the way up to, as you can see here, just past 1.16, and we tapped on a daily area of resistance, which I'll get to in a moment. But not last week, but the week before. Okay, so we breached the area, bullish candle outside of the zone. We also spiked straight through the ascending channel right here, which you can see, and I did say I'm going to wait for a weekly close, not a daily close, but we need a weekly break and close out of this resistance zone. And did we get it? No, we didn't. We came all the way back down, closed as a shooting star. At the follow through the week after, and then currently it looks as if we're going to go even lower. So with that being said, if we go down to the daily time frame, we can see this in a zoomed in perspective. So yeah, we came all the way up. As you can see here, see this zone, this green zone, this is where we breached it last time, but did we get a weekly close above? No, we didn't. We dropped back down, we came back below the area of resistance, and currently we're getting a follow through to the downside. Yesterday's candle, we've had 1, 2, rejecting this little box zone I have on here. So there's a small area of consolidation, and currently we're in short. We are in short format on the Euro USD at the moment. I've got my risk reward tool on there, which I'll get to in a minute. But if you come a little bit lower, so this risk reward tool, my entry was 1.1273, stops above the zone, above the box. We've also rejected our descending trend line here, and we've also broke this trend line too. So I've had my eye on this, and we've also broke this daily area. This blue zone is a daily area of support. So I'm going from 1, the rejection, which we couldn't close above the zone, the shooting star, the follow through the week after, broke my trend line, broke my blue area of support there as well, and now this is heading lower all the way down to 1.1150. So with that being said, this is on the short side of things. I'm going to wait to see how this plays out. I'm not sure how it will react around this area, this zone. However, if we do get a break below, I'm looking to actually hold my short position, okay, and then go for the 1.1 region. If the 1.1 weekly area of support breaks, I'm not going to put too much emphasis on it now, because the state of this currency pair recently, we can't just say, yeah, it's going to go here. We have to follow it and be careful and always keep up to date with the price action, because on this currency pair, things can change in 24 hours. So short term right now, short the euro, 1.1130 to 1.1150. You can see the risk reward, etc. I'll put all of this on the screen anyway. And we've got the FOMC minutes tonight, which I'm expecting USD strength overall, because if I correlate this to the USD CAD, got the Euro USD and Aussie dollar looking to go short. So with that being said, I reckon the fundamental announcement will actually give us a boost in the technical direction. And again, I'm wrapping all of that up from everything I've seen from high to low on the Euro USD. I don't have to go that low, but I'm just putting that into perspective with the news that's about to follow through. So that's the Euro USD. Now I'm going to jump over to the USD CAD. So USD CAD. Now this one, I've seen many people on social media selling USD CAD. We had a nice little short run here where it was about 150 pips from the rejection of the 1.3 zone, which was a brilliant trade for all those that actually did jump in. However, we did actually rebound off the monthly support, 1.2830. Now, from a higher perspective, let me just go from top to bottom. So weekly time frame, as you can see, this move, this decline, we haven't actually had a viable retracement, a Fibonacci retracement on this one. And we actually found support around 1.2500. If you can see where we found support before we had the bullish engulfing candle, it is a pretty viable level going back in time. So we've had that. So we pulled back up. We broke 1 or 2 of our trend lines. This is just one of them. I had another one from top to bottom which was also broken. But if we look at this on the daily time frame as well, so we've had the rejection more or less, to the these key levels are highly accurate, and the way we lay these key levels on, just there are foundations, and everything else comes on top in phases. So that held strong. We came all the way back above the monthly resistance 1.2830, which is now support as labelled over here on the right hand side. We've rejected and formed a spinning top doji around the 1.3. We had a little bit of indecision. We pulled back and we spiked straight through the support as a retest, but we've also retested our trend line, as you can see here. So we broke the trend line. So firstly, support held, broke the trend line, retested the trend line and the support. We also have a morning star here, 1, 2, 3, and I've also seen the 38.2 retracement from this point 1 to point 2. This is a retracement. Now we're holding firm, and we are looking for 1.3160 upside target, which is more or less, we're anywhere between 1.3130, 1.3160. It's going to be a good area to maybe take out some of your position on USD CAD. So again, this comes down to, as I mentioned at the start of the video, if you want to build your account, you want to compound your account. In such a case, with such a trade like this, which we could maybe even anticipate for it to come a lot higher, maybe even up to 1.3430, because we haven't had a retracement yet from the 1400 pip plus decline. In such a trade, you know, if you did 1 or 2 lots, let's say you did 1 lot, you made 100, 150 pips, $1,500 or £1,500. However, you anticipated the trade to go even further. When it comes to trade management, what you can do, you can take 70% of that trade off. So you bank that into your balance. Bring your stop loss up, past break even, so the risk is minimized on that trade, and your mind is now free. That's a risk-free trade. You can maybe just let loose, let it do its thing. If it hits your target bonus, you could even maybe anticipate making half or maybe even match what you've banked already, and yeah, go from there. And it's completely up to you the way in which you want to manage that. Do you want to take some out? Do you want to take half of it out? Do you want to take half of your trade out, put that in the bank, spend that, save that, or do you want to compound it? So there's so many different factors that we have to take into consideration. The analysis, the trades, trade management, withdrawing, keeping your psychology balanced. There's so many factors, and all of these factors, you can't really argue against them, because I could sit here and say 5 things, I could sit here and say another 5 things, and I wouldn't know which ones to go with myself, because every trade is unique, every movement in the market is unique. So, moving on. So yeah, USD CAD right now, we are looking at going straight through this boundary, straight through 1.3, and to make new highs past this zone, 1.3013-ish. We're going to make new highs past that, and we're going to see the resistance level. So guys, you know, you can use this analysis in combination with your own analysis, your own trading setups, etc. But that's my take on the USD CAD. Reason I wouldn't short it is because we have all of those things from the underlying essence of the higher time frames, and I don't really want to go against that. And again, USD CAD, I've been watching this now for more or less 7 or 8 months. And because I look at the same things day in, day out, very relaxed routine, glance at the computer, maybe on my phone sometimes, with the NetDania app, I know all of the key levels of my favourite currency pairs. So again, it comes down to experience, how well you know currencies, and you always tend to find your own feet with the ones you enjoy trading the most. So that's USD CAD. Again, FOMC tonight, expecting bullish dollar strength, just because of my experience with the technicals. Technicals can often paint the picture before the fundamental announcement comes through. And you'll see, when you get experience, how very well timed the key levels are touched, the fibs are touched, the date, you know, it's all very well timed in conjunction with the fundamental announcements which are going to come out. So, USD CAD long. Last but not least, don't want to waste too much of your time today, I'll keep it short and sweet. Aussie dollar. Now, Aussie dollar, last time I went over this, we were trading around the highs. And what I actually seen with one of my recent students when we were going over this was a fib retracement potential. Okay, potential fib A to B down at these lows here. A 61.8 retracement, where this cluster of prices, we have the 61.8 and we also have resistance 0.7550. Once again, these key levels, the way I plot them on there, solid, firm foundations for many weeks / even months ahead. So now current week, we've had 1, 2, this a huge down week here, huge shooting star. We broke through both of my daily trend lines, which I'll get to in a moment. But this is just trying to hold on for dear life. It's looking as if it's going to get slammed. Next point of call, 0.7200, a break of that, 0.7. However, the fib, this is just something to keep an eye on. Again, don't take it as gospel. Okay, don't get offended. Don't get upset. But there's a potential, which just from this fib, that Aussie can come all the way back down to 0.6580. I'm just reading the price action. That is all. So, just something to bear in mind. It could come back to make new lows, and we also have my monthly support zone, 0.6670, just above it as well. It could come even lower, but again, I'm not going to get into that now because my job is not to give huge, longer term projections. That's all in my head, all on my journal. I'm just going to share a little bit with you people. So looking at the daily, if you look at the daily on the Aussie, boom, rejection, huge breakthroughs was triggered from some data that came out in the Asian session, broke the trend line. We had a huge bearish engulfing Marubozu, shooting star, momentum was pulled down, MA's crossed over, broken my monthly area of support, which is now resistance around here, 0.7390. Daily area we're stalling on right now. However, Aussie, boom, it's just trying its best, simple pullbacks. But yeah, it's trying its best to hold its weight above ground right now. But yeah, 0.7200, boom, coming soon. So Aussie, you can even wait for the daily close on this one to go short. But again, the correlation between this and USD CAD, we can see some mini little lower highs here as well. Break of the support, we're going to 0.7200. Break of 0.7200, we're going to 0.7. Again, we could see a test of this level. We could pull back all the way to the trend line before actually going short once more on this. So let's just see, something like this perhaps. We could get the bounce before the overall swing to the downside. Even if I put a future fib on, just getting a little bit creative here. Does that line up? It doesn't really line up with any of my fib levels. But yeah, cross that bridge when you come to it. So Aussie short as well. So we have Euro USD. Let's just do a recap. Euro USD shorts, Aussie shorts, USD CAD long. Anything else I could just throw in there? Maybe a bit of GBP USD as well. I was really happy with my projection of the A, B, C, D fib, where we got the rejection of the D extension and the weekly resistance again, key levels accurate. We fell down, we declined through 1.4500. We've retested that zone once here. Yesterday we retested that zone there. However, I do have a fib which removes some of this confusion. Just focus on what's current. So remove this, remove this. So yeah, the fib here lines up nicely just above the resistance and the 38.2. As you can see, we are looking to, well, this whole area is holding strong now. So as long as we maintain below 1.4500, GBP USD shorts only for me, below this level, next point of call, 1.4260. Okay, 1.4260. Break of that level, we could again once see monthly support 1.4. So I hope you gain something from the analysis and the trade setups. Please take what you need, discard the rest. Discard your feelings from the equation of trading, and I wish success upon everybody who watches the videos, whether you enjoy them or not. That's completely fine. So yeah, moving on. Have a great week ahead. Watch out for the news tonight, and it also helps just to maybe make some notes of what I've gone over. So yeah, thank you, wish you all the best.